You can learn to trade like a pro and make thousands of dollars a day with this proven trading strategy. Discover how to use Bollinger Bands and the MACD indicator to make consistent profits in the market. I used to trade blindly, but then I discovered how to use the MACD indicator and Bollinger Bands together, and now my trades are profitable every day. Once I learned how to buy low and sell high using Bollinger Bands and the MACD indicator. Welcome to our channel. If you are looking to learn about the Bollinger Bands and the MACD trading strategy, then this is the place for you. We created this video to teach you how you can use these two indicators to trade the markets. Make more money with this simple but powerful trading strategy. Subscribe and like the video for more trading tips. This trading strategy can be used for Forex, stocks, and crypto. Okay, so how do I create a trading strategy with Bollinger Bands and the MACD? Technical analysis is a popular trading strategy that can be beneficial to both novice and experienced traders and investors. Traders can use indicators such as Bollinger Bands to get an idea of where the market is priced at, while traders use these indicators strategically in order to stay ahead of the markets. To learn about technical analysis, invest some time into watching other videos on our channel about it and getting familiar with its basics. Bollinger Bands are a set of bands that center around a security's moving average. They show standard deviation around the security's price range. Bollinger offers valuable trading information in the form of these bands, which can be even more valuable when combined with other indicators like volume and volatility. Creating a rectangle pattern on a chart, you need to use Bollinger Bands to set up rewarding trades. A buy and hold strategy works best when a security moves sideways. However, it's worth looking into the Bollinger Bands meeting strategy, which utilizes lower limit orders to buy stocks at or near the lower band and higher limit orders for stocks near the upper band. This trading strategy is called swing trading. You can customize your risk level by adjusting the Bollinger Band settings to a standard deviation of 1 with 2 standard deviations. MACD is used in the financial markets to identify whether a security is over or underbought. When it crosses above the center line, it signals that there's a trend reversal likely, and traders typically look for strategies with built-in support or resistance levels during such times. When you see an initial price rally, or a sudden spike in a security's price, it is important to evaluate the momentum behind it carefully. Unless the momentum subsides, sell your long positions or enter short positions, as this may signal that the trend reversal will soon follow. Bollinger Bands are a tool that is composed of 2 lines on a chart perpendicular to the price, and they can provide traders with accurate signals for technical analysis. A MACD indicator relies on different levels or moving averages and provides indicators for the market's volatility and momentum. Be sure to understand the basics of both Bollinger Band and MACD, then you'll be able to use them in your trading. Okay, so what is the Bollinger and MACD combination? How to use Bollinger Bands and MACD to trade Forex. And go over the advantages and limitations of the Bollinger Bands and MACD system. Bollinger Bands are a concept that let traders explore the cyclicality of volatility. MACD trends in this phenomenon and ultimately yields more strategies for trading. Using these 2 indicators can help traders when making trades. The direction and strength of a trend are obvious indicators, and the volatility is especially important for figuring out whether that trend will last a long time. Traders can use the MACD to find if a trend is picking up momentum or slowing down, and ready for a possible breakout. The Bollinger Band can be used as an entry trigger and subsequent confirmation of a trade. Okay, take a look at how to use Bollinger Bands and MACD to trade Forex. Traders can trade with Bollinger Bands and MACD in a variety of different ways, but the 2 most common ways to do this are to spot a breakout or to use trend trading rules. It offers a level of market predictive accuracy that is difficult to achieve with other indicators. Bollinger Bands can be used as a tool to look for trading opportunities in the market. A trader should consider the following steps when using this tool. Identify a trending market using MACD. Look for a divergence in the MACD, which indicates a potential breakout. Look for an entry on a break of the 20 moving average or trend line. Look for breakout confirmation through Bollinger Bands breakouts with increasing volatility and increasing momentum. In this chart, it's clear to see that the trend started with a downtrend and a falling channel. As this happens, traders can take trades on decreasing momentum. A break above the 20-period moving average middle line in Bollinger Bands after observing a bullish divergence will give the signal to enter the long trade. The dotted line on the upper side of the channel represents trend line resistance and coincides with the 20 MA of the Bollinger Band when price crosses it. A break of these two lines will confirm that this is a significant level, further reinforcing the bullish bias. The MACD indicator supports bullish trading as the MACD line has crossed the signal line and continues to move above the signal line, showing strong bullish momentum. The Bollinger Band then confirms the upward movement when the price starts to walk through the band with increased volatility, band extension. The stop can be placed at the bottom of the Bollinger Band or at the bottom of the falling channel. Targets can place previously high or significant resistance levels while maintaining a positive risk-reward ratio. As a breakout trade is likely to turn into a trend reversal, traders should consider multiple target levels and either move up the stop manually or use a trailing stop. Trend trading with Bollinger Bands and MACD. The Bollinger Band MACD combination can also be used in trending markets through the following process. Identify the trend with MACD. Use 20 MA bounces as potential entry points according to the trend. Watch the MACD for confirmation of ongoing momentum. Use the lowest band as a stop loss in an uptrend or downtrend. The chart provides an overview of the Bollinger trend with its MACD trading strategy. This shows a definite uptrend where traders should only enter long when taking this into account. After the initial rush of momentum to the upside, the momentum is dropping, and although the MACD line crosses below the signal line, these moves are of low volume and result in short-term stability rather than a move against the current trend. The upside is further reinforced by the fact that the price bounces off the 20 moving average and continues to make higher highs and lower lows. Traders can enter long positions according to the Bollinger Band. Traders can exit the trade when the price drops to the 20 MA, or they can look for the Bollinger Band break as an exit signal. Traders can use a trailing stop loss, or stops can be moved manually along the lower Bollinger Band as the price goes up. You can set goals to critical support and resistance levels while maintaining good risk management. Okay, the advantages and limitations of the Bollinger Bands and MACD system. 1. Bollinger Bands can be applied to any asset in any time frame, as can the MACD. 2. Bollinger Bands naturally provide stop-loss levels that correspond to the lower bands for long trades and the higher bands for short trades. 3. Traders can see trends and volatility in all markets at a glance. The combination of Bollinger Band and MACD is not suitable for novice traders. People new to Forex trading need an in-depth knowledge of both Bollinger Bands and MACD. Bollinger Bands perform best in trending markets, while MACD is a trend-following momentum indicator. If applied incorrectly, traders can receive conflicting signals. A simple day trading strategy using Bollinger and MACD. Powerful day trading strategy for trading futures, stocks, and ETFs. Today, we'll take a look at how to use the MACD indicator to identify the trend and Bollinger Bands as the trade trigger. The MACD parameters are 12 for the fast-moving average, 26 for the slow-moving average, 9 for the entry signal line. The Bollinger Band settings are 12 for the moving average, 2 standard deviations for the bands. Let's take a look at the trading rules. Rules for long day trade. MACD above signal line and zero line. Placed by stop order at the upper band of Bollinger Bands. Rules for short day trade. MACD below signal line and zero line. Place sell stop order at the lower band of the Bollinger Bands. Let's take a look at the details of this trade setup. The most potent run appeared to have happened today, but after looking at the MACD, we can see that it had a lower high. This bearish divergence showed an early warning for reversal, which created an excellent entry for a trade. Here, prices fell and MACD moved below the zero line and its signal line. This signaled for a trade to be executed in a bearish fashion. A sell stop order was placed at the lower Bollinger Band to give profit protection to this position. Finally, price started to drop in. We saw big profit. Let's take a look at a losing trade. Our entry point was poor, so we lost money. This is why we use a strict strategy and don't worry about trade entry points as much. Let's break this down and try to understand what was going on. The day was quite busy for some unknown reason, with many more people than usual. the market opened with a moderate range but became increasingly crowded later in the day. Bollinger Bands shifted away from their center and volatility dropped as an indicator that the market might be declining. A congestion inevitably leads to a breakout. The 3 consecutive red bars was the breakout from the congestion, and here is where our entry level was set. At the same time, MACD confirmed a downtrend, and this is where we entered short. However, the momentum growth that was visible in the MACD accelerated. It was a bullish divergence from the historical trend that should be taken with caution. Ultimately, this breakout downwards turned out to be a morning fake reversal. We entered short at the low of the day. What could be worse? Not having a stop could be worse. Using just 2 indicators and 2 simple steps, this is truly a simple day trading strategy. I tried it over different time frames and found this day trading strategy to be surprisingly robust at capturing breakout trends. By requiring the MACD to cross not only its signal line but also its zero line, this day trading strategy can spot short-lived intraday trends. This MACD app is markedly different from Gerald Appel's original basic MACD trade. If you want to limit yourself only to high probability trades, take the setups that occur after MACD first crosses the zero line. This rule will keep you in new trends, not mature trends that are more likely to reverse. This is a good volatility-based approach, but the number of parameters involved increases. You will need to select the number of days to include in your average trading range and the percentage to be used for your stop and target sizes. You also need to make sure that these parameters are consistent with your trading period. Are there any successful trading strategies for using Bollinger Bands? Please comment below.
Please like, subscribe, and hit that bell button for more videos.